Hello everyone, I am Zara Fatima. Welcome back to my channel. Today in this video I am going to explain you the subject income tax. Under that the topic is income from house property. In my previous video I explained you the theoretical part of income from house property, and in my last video I explained you the format of income from house property also. Now in this video I am going to show you how to compute income from house property. Students, for computing income from house property, first we have to see whether the property comes under the Rent Control Act or not, because the Rent Control Act is applicable in some areas. So first we have to see whether the property comes under the Rent Control Act or not. If the property is not comes under the Rent Control Act, simply we have to apply 3 steps to calculate the gross annual value. For calculating the income from house property, first we have to calculate the gross annual value, because income from house property is not calculated on actual rent received, it is calculated on the annual value. So in working part, first we have to find out the annual value, that is gross annual value. Now let's see, the question is, on 1st April 2022, Sri Bhupesh is the owner of a house which is let out to Sri Mohan Lal on a monthly rent of rupees 7,500. Here monthly rent is given 7,500 and received 3 months advance rent and rupees 12,000 as deposit. The municipal rental value is rupees 60,000 per annum. The municipal rental value is given 60,000 per annum, whereas actual rent received is given in monthly form. And rent of similar building rupees 8,000 per month. Rent of similar building is nothing but fair rental value. It is also given per month. Sri Bhupesh incurs the following expenses: municipal tax is 6,000, insurance fire rupees 300, interest on loan taken to construct the house rupees 14,000, ground rent it is 250 rupees, repairs 3,000 and collection charges 500. Compute the income from house property for the current assessment year. So in this question, actual rental value is given, that is rent received, and municipal rental value is given, and rent of similar building, that is fair rental value is given. So in the question, standard rental value is not given. That means the house does not comes under the Rent Control Act. So first we have to find out the gross annual value. For gross annual value, we have to apply 3 steps for calculating the gross annual value. The first step is calculating expected rental value, that is ERV, higher of the following 2 amounts. Number 1, municipal rental value, and number 2, fair rental value. Municipal rental value, the value which is fixed by the municipal authorities or local authorities, and number 2, fair rental value, that is rent of similar building in similar locality, and actual rental value, that is ARV, the actual rent which is received by the SSC. So in the first step, expected rental value, higher of the following 2 amounts, MRV and FRV per annum. MRV in the question it is given 60,000 per annum. FRV, fair rental value, that is rent of similar building, 8,000 per month. So 8,000 per month into 12 months we get 96,000. So expected rental value, higher of the 2, MRV, FRV. MRV is 60,000, FRV is 96,000. So from this 2, the higher value is 96,000 FRV. So this 96,000 is our expected rental value, that is ERV. Now in the next step, second step, we have to calculate the actual rental value, ARV. For calculating ARV, the definition is actual rent received plus rent outstanding. So in the question, actual rent per month is given, that is rupees 7,500. So rent received 7,500 7,500 per month into 12 months, that is 90,000. And in the question it is not given information of any outstanding rent. So there is no outstanding rent because the house is let out during the whole year. So there is no rent due or rent outstanding. So ARV is 90,000. 7,500 per month into 12 months, we get 90,000. This is our ARV, actual rental value. Now, in third step, we can calculate gross annual value. Gross annual value, higher of the following two amounts. Number one, expected rental value, which we calculate on step 1. And number 2, ARV, actual rental value, which we calculate on step 2. So, in step 1, the actual expected rental value is 96,000 ERV as per step 1. It is 96,000 and ARV as per step 2 is 90,000. So 96,000 and 90,000. From these two, the higher value is 96,000. So this 96,000 is the GAV. So in the working notes, first we have to calculate the GAV. Once we find the GAV, 90% of our problem is completed. Now the next step is we have to draw the format. The format is this one, particulars and two columns, inner column and outer column, and you have to write the heading in 2 lines. In the first line, computation of Mr. Bhupesh income from house property for the assessment year. Your assessment year is 2023 to 2024. This is the assessment year. Now, under the format, first we have to write gross annual value. Gross annual value just now we find in the working notes. The gross annual value is 96,000. So, 96,000 is the gross annual value that represents GAV. That comes in inner column, that is 96,000. From the gross annual value, we have to subtract the municipal taxes or local taxes. And students, municipal taxes is allowed on payment basis only. And municipal taxes is allowed on payment basis, as well as municipal taxes should be paid by the owner. If it is paid by the tenant, it is not allowed for deduction. So in this question clearly it is given. The municipal taxes is 6,000 paid by Mr. Bhupesh. So municipal taxes is allowed for deduction. So 96,000 GAV, from that deduct the municipal taxes 6,000. 96,000 minus 6,000, 90,000 is the net annual value, NAV. After getting the net annual value, we get the deductions. Less deductions under section 24. Under section 24, only 2 deductions are allowed. The first one, standard deduction. This is the compulsory deduction. 30% of NAV. This 30% is fixed. 30% of NAV is our standard deduction. So just now we find the NAV, that is 90,000. And 30% of this 90,000 is 27,000. You should write in inner column. Now, after giving the standard deduction, one more deduction is allowed, that is interest on loan. If the SSC took the loan for purchasing the property, for constructing the property, for repay the property, for reconstructing the property, in that case interest on loan paid and as well as due, both are allowed for deduction. And in this question the interest paid is given 14,000. So interest on loan taken to construct the house 14,000. So 30% of NAV 27,000, that is our standard deduction. And number 2, interest on loan 14,000. 27,000 plus 14,000, 41,000 is the total deduction under section 24. So this deduction value we should subtract from our NAV. 90,000 minus 41,000, 49,000. This 49,000 is a positive value. Here NAV is more and deduction value is less. So 49,000 is a positive value. So when positive value is there, that answer is represents income from house property. If negative value is there, that represents loss from house property let out. So in this problem, income from house property is 49,000. So students, with this we complete the question income from house property. How to calculate income from house property? Just now I showed you. In my next video, I will show you how to compute income from house property when standard rental value is given. So students, if you like the video, then give a like, and if you not subscribe my channel, please subscribe the channel so that future notifications related to my future videos will come to you directly, and stay connected with us for the upcoming videos, and inform your friends about the channel, about the video, so that it helps to you and your friends for the preparation of your examination. And students, thanks for watching the video and all the best for your examination.